Hey guys, if you're watching this video and you're aware of my main channel, you may already know what I have in my portfolio. You already may know that my two largest positions are Tesla and Palantir, and then I have some Nvidia, some Amazon, and then some other smaller positions as well. I also have an S&P 500 ETF in a different portfolio that just sits in the background, and I just add to that as dividends come in. And I've been holding that one for a number of years. Anyway, there's a position in my portfolio that I have right now that I started adding in March 2023. This company is a mega cap tech company. It's a very, very popular one. A lot of people hold it in their portfolios. And right now I'm considering selling it. So I wanted to explain why in this video and welcome any conversations, any other points of view. You know, I'm not committed 100% yet. I'm about 95% sure I want to sell. But I want to welcome the conversation and open it up. This company is Alphabet, of course, the parent company of Google. And to be fully transparent with you right now, as it currently stands, I'm up about 40% on this position. Now, I'm a long-term investor. I originally planned when adding this to my portfolio, like I said, in March 2023, that I would hold this for many, many, many years, and I'll just let it do its thing over time, keep dollar cost averaging in, and then one day when I needed the money, you know, I would sell, whatever. That's beside the point. But the point I want to make right here is that I'm not looking to sell this for profit. I'm actually thinking about selling this because right now my original investment thesis, the reasons as to why I added this company in the first place are being challenged. They're no longer aligning. And I'm also not thinking that this position is overvalued or anything like that. It's literally that the investment thesis has been somewhat destroyed. And I'm not really liking necessarily where this company is going. It's not really sitting right to have this one in my portfolio anymore. So I suppose I should firstly fill you in as to why I originally purchased this company. Now, one of the main reasons was because I thought they stood a very, very, very good chance at becoming an AI leader. They seem to have the right resources and a lot of money to pump into their AI advancements to really, really position themselves, like I said, as a leader in the AI revolution, which is definitely here. If there's anyone out there thinking that the AI revolution isn't happening, I don't know what to say to you. It's happening. There's so much money from businesses being pumped into the AI advancements and solutions now. It's here, it's happening, and I want to align my portfolio for that. I will also say that Alphabet's financial condition is pristine. Honestly, top notch. As an investor, you don't really have much worry about their cash or their balance sheet. And on Forecaster here, you can really see just how strong Alphabet are in terms of their financials. And you can see this on an annual basis or even a quarterly basis as well. Something else I want to point out is that they have a low risk of bankruptcy. Like I said, you can sleep well at night having this one in your portfolio. It's one of those mega cap companies, highly liquid. It's a good position to have. I just don't know if it still sits right for me at the moment. Look at this as well. Shares outstanding have been decreasing. This is because Alphabet, have been buying back their shares actively. Again, this is a good thing to see. So if I was just looking at these things on face value, and then you can see the products as well here, which is a very useful tab actually, and we can see that Google search as of 2023 whole year, 57%. That is the majority. This is what I'm saying about this. This doesn't quite sit right given that I'm not fully on board with Google search right now. But anyway, with all this said, it looks really, really promising. And then when we go and have a look, let me remove the dividends there. You can add these things if you want to. When we look at the chart, we can see that actually it has fallen quite a lot from all-time highs. This could be a very, very good time to buy. In the last 6 months, it is down by about 4%. And I know a lot of people have been indeed buying. We can see many other things. Seasonality is incredibly interesting, whether the stock is overbought or oversold right now. Fundamentals, they've got this new political tab. But if I was just basing it off of this, I would definitely be adding more. But of course, there's always other things that need to come into play and that you need to look into when thinking about what's in your portfolio. And if you do want to try Forecaster, you can for 7 days free of charge using the link in the description below. If you like what you see, you can then use the code Hayley10 at checkout for 10% off. They also have a lot of businesses that are incredibly popular and incredibly strong that fall under that parent company, that umbrella branch of Alphabet. Just thinking of some now, we have Google search and advertising, we have the Google Cloud business, we have of course YouTube, we're on that right now, which in of its own is a search platform as well, a search engine. we have LinkedIn, we have Google subscription, and we have services. I'm sure there's others that I'm missing there, but that's primarily what makes up Alphabet as a company. Now, I do just want to say that I think, and this seems stupid, like why would you sell if you think this, but I do think that Alphabet will continue to grow and will do well in the future. And I think the stock will reflect that as well. And in fact, I'm not actually planning to sell a single share in this company until after the volatility of earnings has settled. We have earnings coming up for this company in, I think, 3 days, very, very soon. I can't remember the exact date, but it's happening very, very soon. And actually, what tends to happen, and this is not by no means me saying this is going to happen again, but what tends to happen in the majority of cases is that Google shares go up following earnings. Now, I'm not necessarily trying to predict that and trying to benefit off that, but regardless, I'm going to let the dust settle after earnings and then make my decision. That could result in the stock price being quite similar to now. It could also result in the stock price going up and hey, you know, I've made a few more percentage return. Great. But here's my issue and why I am really considering selling. Google search right now as an area of the business, and I just showed you this on Forecaster, makes up the majority of the overall revenue. Now you could say, yeah, but this is the case for a lot of companies, and it is. It is the case for a lot of companies, but the other companies I have in my portfolio whereby one area makes up a large percentage of the overall revenue, that area that makes up that percentage, I am very passionate about, or I have strong conviction for. Google search is starting to break. I do understand that it is the market share right now, and like I said, I don't think this is going to happen overnight, but what I'm starting to notice on a personal note, and people around me and people that I've spoken to, and do let me know if this is the case for you or not as well, I'm now turning to other ways to get information. Before, it was Google every single time. I would search for what I needed, I'd find the information, I'd move on, happy days. Now what I'm finding is, and people are telling me, is that actually you're using LLMs more. You know, the likes of ChatGPT, maybe Grok over on X, or you're just using social media platforms to search for information and products as well. Again, maybe X, maybe other ones exist. You're not just primarily going to Google anymore. Okay, well, why is that? I can talk from my personal opinion and people that I've spoken to. It's because it's not showing us what we need to see. It's not giving us the information as well as it did once before. Why is that? Let's dive a little bit deeper. Well, actually, what I would point you to here is a fantastic, really, really insightful video that was made by Mr. Who's the Boss on YouTube. I'm sure you've heard his channel before. I will pop it on the screen now and I'll leave a link in the description below. But he basically spoke about how Google search, what I think his video title was, Why Google Search is Falling Apart. He points out many interesting things in this video, including how Google ads are now populating a lot of the search results, meaning that when you search for something, the first page basically is just a Google ad. So you're not actually seeing the most accurate, necessary results for your search that will give you the information you need. You're seeing all the ads first, and you have to then put in a lot more time, a lot more effort to find the information that you need. And you can probably just go elsewhere and find it in a fraction of the time. And also, the ads are being prioritized over the most accurate search results. But that video is definitely worth a watch in its entirety. Now, I suppose the question then comes, do I think Google search will lose its market share majority, which right now is really high. I can't remember the exact figure, maybe like 60%. I don't know. I'll try and pop it on the screen. It's high anyway. They have the market share. And do I think everyone will suddenly just go and use Yahoo or Bing or something else? No. But I do think there is a possibility that slowly over time, the market share starts coming down and down and down as people naturally turn to other platforms like I just mentioned. And because of the fact that they are relying quite heavily right now on the revenue from the search advertising and then the additional portion coming from YouTube, which is pretty much a search engine too, any decrease in this market share over time could be potentially quite painful to them. Alphabet, of course, does have Google Cloud, which is doing pretty well, but it's definitely not as big as the likes of AWS or Microsoft's Azure in that market. I don't know why Microsoft called it Azure, because that's really, really difficult to say. It does not roll off the tongue. But also on top of that, I'm seeing right now a lot of antitrust lawsuits and a lot of issues regarding that sort of thing going on, which I'm monitoring, and it's definitely coming into play as to why I might sell. And the fact that the US government is now actually considering breaking up Google to end its monopoly in search is kind of concerning. I would say that this has actually opened up an opportunity for you guys to grab yourself some cheaper shares if you have, very strong conviction in this company. However, for me, it just added another reason that I need to look into. Waymo is obviously another interesting thing that we could speak about. Now, I'm just backing Tesla for large-scale rollout of autonomous vehicles. I think Waymo are doing a really good job, pat on the back to them. I think they're doing a wonderful job in moving autonomous vehicles forward. But the way I think about this right now is a Waymo vehicle is just so expensive compared to what the robo-taxis for Tesla will be, that I just don't see how this scales and does well at scale over time on a global platform. But do let me know what you think. I would love to hear your thoughts on this. And if I do sell, which is looking likely at this point, I will sell for profit. Like I said, I'm already up 40%. That could change after earnings. Who knows? I'll monitor that situation. And then I might move that money into one of the new positions I have not yet got that's currently in my head that I might add to my portfolio, or I might look to actually deploy that money back into another position that I already have in my portfolio. Once that decision's made, of course, I'll let Discord know, I'll let my Patreon know, and at some point I'm sure I'll make a video on it too. But do subscribe to my main channel so you don't miss any updates like that. And just a reminder, if you do want to try Forecaster for 7 days free of charge, use the link in the description below. If you like what you see, you can then use the code Hayley10 at checkout for 10% off. Thank you so much for watching this video, and I'll see you in the next one.